Welcome back, everyone. Sean Ward, lead instructor here at Ward and Fifth. Just in case you guys do not know, at Ward and Fifth, we not only teach the fashion brand launch, but we're a full house A to Z service company for all aspiring entrepreneurs, early stage startups, and emerging companies. So most of our clients in the first couple of years of our business were in the fashion industry, but more recently, we've brought on clients who are in financial technology, in construction, in the automotive industry, in the sports apparel industry. So it does not really matter what type of consumer good or even services that you're looking to grow. If you're a small business or a startup or an entrepreneur looking for someone to help grow your business, check us out at www.wardandfifth.com. Thank you so much for taking our course. We're in the pricing your product portion of Fashion Brand Launch, and we will get started with lesson two. So right now, what we really want to do is to continue with our definitions, and really I want to bring some graphics in to kind of paint the picture a little bit more of what we were talking about in the first lesson. So remember, your FOB, that's your brand cost. Okay, that's the cost you're going to be paying to the factory. I have this little factory icon, and this is something that you should negotiate with your factory. And one thing I really want you guys to understand is that, and I'm working on this right now with a client out of California who's launching a baby's accessories brand. And one thing that we've been doing with her from the very beginning, and this is a company that we work with on filing the name of her LLC, to trademarking the name. We had a trip to Paris to go to the Premier Vision show to look at materials and textiles, and we're negotiating with factories now. And one thing through every single part of the process, and I've preached to her, and we actually do it because our firm is, we don't just teach, but we actually do. And one thing that we've been doing, and she really understands now, you have to dual source everything, especially if you're a brand new brand, you're working with factories for the first time. You want to make sure that you reach out to as many factories as possible. When you get to a point where you need samples made and you're going into production, dual source everything. When I say dual source, you want to source it from two different factories when it comes to manufacturing. So when you're dealing with FOBs, you want to be able to not only negotiate the cost, but you're also dealing with timing. When can they complete the production run? How the quality is going to be, the communication is going to be, especially when you're dealing with language barriers. So when you're going into this, I know we're talking about pricing now, but when you're going up in pricing, dual source, so you have some sort of leverage when it comes to negotiations. You can understand if you only went and started working with one factory and you're launching for the first time, and the factory tells you it's going to cost you to $50 FOB for those handbags, and then you're stuck with that. Maybe it's good, maybe it's bad, but you would never know. If you go and you get another opinion and you develop that handbag with a second factory, they may actually come back and say, you know what, this FOB is $40. The next thing you know, you get both of them to manufacture for you. You'll find out which one is better with shipping on time, which one is better with communications, which one is better with returns, and that's where you go from there. So one key thing of getting the right FOB for you is negotiating and making sure you dual source. Okay. Now, here's the visual. You're leaving the factory. You've paid your FOB. What happens is a freight company picks your product up, puts it in your warehouse, and now the next pricing structure is not, now you've already bought the product from the factory, you pay for the freight. Now here's where you start making money. At your warehouse, you start to sell your product to wholesalers, right? Wholesale accounts. And those are in the fashion industry: Macy's, Nordstrom, Neiman Marcus, Barney's, and you have your independent boutiques throughout the US. And then you also have your online retailers such as Zappos, Amazon, and a lot of other different online retailers, right? Net-a-Porter, Gilt Group, et cetera, Urban Daddies of the world. So now you're taking, for example, and we'll go through an example in the next lesson, but now you're starting to generate revenue. So you have a FOB cost. Now you're selling it to wholesale accounts. They're paying you, and we'll talk about payment terms and things of that nature in a future course. But now they're paying you a wholesale account, a wholesale price. Your wholesale price are usually going to be, and we'll go through the example, like I said, usually double of what you paid your FOB, so that you can actually pay for your, you pay basically allow enough markup so that you can pay your operating costs to do that, right? Because there's time to do that. There are going to be freight costs, et cetera, et cetera. So you want to make sure you're building the margins. And then from your wholesale charge, which is to your retailers, on to the end consumer. Now, many of you are going to be skipping that middle and going that wholesale part in the middle and going straight to retail, which most of our clients at Wardencrypt do from the get-go is they go directly to consumer. I usually encourage this so that it allows every brand to start building their consumer base early on and not having to rely on retailers to buy their product. The more you build your brand with the end consumer, the more you'll have a buzz in the marketplace and demand in the marketplace. So when you do open up those fashion retail accounts, you'll have a higher chance of the sale through. Again, we'll talk more about that later on, but this is kind of a bit of logic in the background when we talk about pricing. And then your retail costs at the end is what the consumer is going to be paying, either you on your e-commerce page, or they're going to be paying the wholesaler, which is the fashion retail stores. Okay? Hope this visual helped you guys out. We will take a break and come back and go to lesson 3. Thanks a lot.